Well, and we do have to remember this is one data release. We're going to get a lot more information on 2025 as the year rolls on. So, and this is a very data dependent Fed. Like they will pivot and they will respond to data as it comes in. So that's important to keep in mind. And yet what this does is it gives them a luxury of time, some patience, right? U.S. growth looks very good. Consumer spending, business investment, these things all look good coming into 2025. We see the labor market shoring up. This hiring is very encouraging. The unemployment rate is back down to quite low levels. So these are good things. And it means that the Fed, as it faces a lot of uncertainty on fiscal policy with what comes in with the Trump administration, the tariffs, the immigration. There's also some question marks still out there about inflation. We've made a lot of progress in the U.S. on inflation. I think we're going to continue to get good news coming into this year. And yet, we're not back to where the Fed wants to be. And so that means they've got some pressure off of them. They can wait to see the inflation come down to target. They can wait to see exactly how these fiscal policies are playing out. It just gives them a little more time and they don't have to be quite as rushed and quite as concerned about the other side of their mandate, which is the labor market, though they will continue to keep a close eye on this. But for right now, it gives them some time, and that's good.
I wanted to get your thoughts also just on the resilience, I guess, of the U.S. consumer in general, particularly on the back of the strong jobs report. But I think investors have been chatting a lot about, not only as we move through 2024, but even previously, the exhaustion of COVID savings, for example, incremental spending being put on credit cards, delinquencies ticking up. But despite all of that, right, we continue to see the U.S. consumer being quite resilient. So kind of what should we be watching there as leading indicators, and how long would you expect that this resilience can continue?
Right. So I come back time and again to the labor market. I mean, that for most Americans, their paycheck is what determines what they can spend. And so if the paychecks are good, if the jobs are good, then you're going to see a consumer, not all consumers, but you're going to see the consumer overall in good shape. Now, we've had other factors that have buoyed the U.S. consumer even beyond the labor market in recent years. But I think we're going to look back on this period and see that the shining star of the recovery from the pandemic in the United States was the U.S. labor market. And it was very dynamic and moved people into a lot of jobs and also people from the bottom up. Right. So this wasn't just about high income workers getting jobs back quickly. So I think the labor market's important. And that's why it's so good to see this kind of sustained hiring, the growth in the labor market. But there are strains on consumers, definitely at the bottom end. And it is true that while I talk about the Fed has the luxury of maybe more time, be more patient with further rate cuts, that does put continued stress on interest rate sensitive sectors. So we see in housing and consumers that are carrying debts, so like there are pressure that this, that are building on these consumers. So it's not to say that all is fine and good, but the basics, the labor market, the paychecks, like these look really good, and that can sustain the U.S. consumer quite a ways.